The following was recorded in front of a live studio audience at the Studio 21 Podcast Café. This is the United Podcast Network.
Welcome to the Stock Market Authority podcast. I'm Bakes, Kevin Baker. I'm going to teach you how to make money in up and down markets. Very few podcasters or coaches cover this. I'll show you how to lock in profits and minimize losses to make you a better investor. So once a week, you're going to know what's going on in the world and the stock market. Welcome to the Stock Market Authority podcast. Good morning, everyone. This is Bakes, Kevin Baker, Stock Market Authority. Hope you had a great week. I sure did. Let's get right into it. Our top story tonight. We're going to talk about the profit blueprint, identifying winning charts. I had a very good conversation, frank conversation with a sincere subscriber and friend, and I need to explain more, so I'm going to do that, I hope, today. We're going to go through the mailbag and talk about Sharescoops stocks like Biogen and McDonalds and Meta. And we're going to go through our portfolio, the Stock Market Authority portfolio. We've made a lot of progress. I continue my search for the 10 best ETFs to make money every year, like we did last year. We were up 6%. The market was down 20%, and we are working hard to keep our streak alive, and I hope it serves you well. Today's top story. And this comes from my conversation with a good friend of mine, and he basically said, Bakes, you send these emails out, you say there's an arrow there, and it doesn't really mean anything to me. And I say, okay, and I understand that, because what happened with me was I went through the 87 crash. I realized that the fundamentals didn't get people out of harm's way. The technicians, the chartists, the charts and technical analysis did, and so I said, I'm from the camp of what works, and so I don't expect you to see what I see. I'm trying really hard to get there, but it's going to be a tough journey. So I hope I at least have some way of summarizing things to get you to see what I see when I identify winning charts. So, to that end, this is the Grayscale Bitcoin Trust. And this comes from, again, I can't expect you to do this. I've been doing this for 25 plus years. I've read dozens of technical analysis books, and I've read thousands of charts, and I've always identified new opportunities to do the fundamental work on by going to the charts first. So what I see in this chart, I also am considering teaching a course. Let me know if you're interested in that, if you want to learn how to read charts. So charts first, fundamental second, and I want to draw your attention, yes, to this arrow over here that's on the first arrow. This is the 50-day moving average. This is the arrow on the left, the 50-day moving average coming up through the 200. And so what that suggests is this smoothing mechanism suggests that the long-term trend is changing. And it's simply a signal that there's positive change coming. And in particular, you look underneath that, you see the up volume increasing. You see the down volume receding on the down days and the up volume picking up, particularly when you see this breakout that leads to the crossing. Some people call it a golden cross, a little extreme for me. 50-day going up through the 200. Segue over here to the second arrow over here on the left, pointing to the price chart. And this is what I put in my newsletter, and I put it out there, and I said, well, everybody's going to see. This is so obvious that this is a clear buy point, and that's why I bought the ETF. And I understand that this isn't what you do all day. You're doing other things, and you don't have the 10,000 hours that I've put in. And I'm hoping that I impart this to you so that we can really cut to the chase of identifying winning charts, finding new opportunities where we then can do the fundamental work. We're going to talk about that a little bit more next week. I hope you enjoyed Back to Basics last week, where we went through my interview process, at least in part, as to something good's going on in the chart. Let's find out what's going on with the fundamentals. Here, you also see this arrow down here on the lower right. the volume is increasing dramatically. You're seeing at least 150% increase in volume, coupled with that new high, and not a dramatic new high, but a 52-week new high that suggests, and this is what it means in a practical matter. We went through the nuclear winter. We saw Bitcoin go from 60,000 down to 15,000. Now it's coming back up to 30. This is the Grayscale Bitcoin Trust, which doesn't track it exactly, but it holds Bitcoin. It's the best way now for ETF investors like us to do that. And so what's happened? You've had the Fed raise interest rates. A little bit of the froth comes out of the market. We've corrected all that. Maybe people shorted Bitcoin and shorted this trust to take advantage of the downdraft, and now it's the institutions are saying, I got to at least cover my shorts, and maybe something new is going on here, and I got to buy. And it also intrigues me now that the 200-day is turned up, and this is this last arrow over here to the far right, and the relative strength is 88. So that means that it's outperforming 88% of the stocks that are out there in the market right now. So there's positive change happening. Now, we've talked about this a little bit in the past, but what the positive change is Grayscale is suing the SEC so that they can take this trust and turn it into a more traditional ETF. BlackRock, who has more attorneys, money, consultants, lobbyists than God, has signaled that they are going to, they've applied to launch a spot Bitcoin ETF. Their record of getting these things through is virtually perfect. And so they've read the tea leaves or the court documents or whatever, and they think that they're going to get this through. So now the Grayscale Bitcoin Trust trades at a 28% discount. So if that discount goes away in all or in part, you make money with that. You also unleash at least BlackRock, Fidelity, ARK, Wisdom Tree. All these ETFs are going to go out and buy Bitcoin to put into these ETFs. That has to create upside buying pressure on the stock, on Bitcoin, in my opinion. And we're going to be there before all that comes, I think. Now, I could be wrong, but I will not lose a lot of money. And my friend is a big Bitcoin skeptic and says, well, this could all go away. Perhaps, but I don't lose more than 15%. If you've been watching the show, you've seen it time and time again. I know how to sell. I have a sell discipline. Most of you don't. I think that we're worth the price of admission simply to show you how to avoid losses and maximize gains. So this is a base. You see this clearly breaking out here, and this positive change happening, coupled with fundamental news that's coming down the road that could push this higher. So again, my sell ticket is in place if I have to use it, but right now I think Bitcoin is going higher. And the other fundamental point, which might be a little bit controversial, number one, the dollar isn't backed by gold anymore, so the dollar is simply a confidence situation as well. Bitcoin can't be printed. They're going to have 21 million Bitcoin, period, end of discussion. And as we've seen through COVID and through the QE and the last 12 years, the government is irresponsible. They're loaded with debt. You have lifetime parasites that are influential in the government. And so the fact that the dollar is constantly debased is going to continue for a while. And oh, by the way, foreign investors have had a worse situation with their currencies and their natural buyers of Bitcoin. So I'm a Bitcoin bull for now. If it's down 15%, I will shoot this so fast it'll make your head spin. So I hope I've been clarified. This is how I read charts. Please go to my YouTube channel. I want you to, I love the audio part of this, but especially for these components, go to my YouTube channel and please subscribe and share. I want to get to 1,000+ subscribers. I'm at 483 now. I could really use your help. So go to my YouTube channel and let's get that going and take a look at this. To me, it's clear as day, and I want to make it as clear as day to you. Now it's time to check the mailbag.
Incoming! There's a letter in your mailbox.
You got mail.
had a number of Sharescoops stocks that appeared this week. Gus Christensen, CEO of Sharescoops, was on the pod a little bit a while ago. He appeals to my audience, younger audience in their 20s, maybe early 30s. People, Planet, Profit is his prism. I tend to be more pragmatic. I like alliteration, so I decided to throw that in there. I think this world is tough enough to make money. But if you want to have an overlay of corporate governments and environmental concerns and diversity, equity, inclusion, whatever you want to do, you do you. I'm going to try and make money. And if you send me your stocks, I'm going to guide you as best I can. And Gus, it was great to see you in Connecticut this past week. John from Cambridge comes in and says, I work for Biogen. What should I do with the stock? And as my son Jack has asked me to do, I'm going to be as subtle as a 2x4. I think you should sell a third. And it's just this simple. It closed below the 200-day moving average on big volume. And anytime I see that, I want to sell a third of the stock. And I know my suspicion is that the analysts out there are saying, a generic version of their MS drug has been widely anticipated and it's in the stock price. I don't care. I've shown this to you with Cisco. I've shown it with First Republic Bank. My sell discipline works. It is imperfect, but it gets you out of the major pain of losing a lot of money. I saw the First Republic people ride the stock from 160 down to zero, and there's no reason to do it because it's clear as day to me. So please keep your eyes here. So with Biogen, I don't think they're going out of business. So I don't want to make this a First Republic situation, but. Their MS franchise is what has driven this for years and years and years. The Alzheimer's drug, I think, is going to be underwhelming, to put it mildly. The efficacy is fair at best. The payers are going to be pushing back hard, and so I just don't see a lot of good going on here. So my sell discipline has been invoked. I think you should sell a third. Now, caveat, couple of caveats. This isn't financial advice. I don't know your whole picture inside and out. I'm not an RIA or anything like that. But I have done this before, and my stance is if I owned this, especially if you've been working your tail off at Biogen for years and you've gone through the ups and downs, stock's been up for a while, don't give the money back. And don't talk to me about taxes. The only way to get rid of taxes is to lose money. So unless you have, some sort of political reasons, if you're an insider and you have to file 144s and that's going to raise all kinds of flags, I don't know that about you to that depth. I would sell a third and then stay tuned here, keep it in front of me, and I'll let you know if the other 2/3 of the sell discipline is invoked. But don't give the money back. You've worked too hard. Am I being vague? Okay. Jeff from Boston said, I inherited some McDonald's stock from my dad. Is it a buy, sell, or a hold? It's a hold, but an enthusiastic hold. It is in an uptrend. I think having a company that grows sort of single digits top line, having a 26 PE is kind of ridiculous. I think this also plays into what I hope I bring to the table. I've been in 6 different firms, so I know where the bodies are buried, and I know how this works. McDonald's I'm making this number up. It's going to be around right. The McDonald's is 2% of the S&P. The chart looks okay, so I'm going to make it 2% of my portfolio. I'm going to hug the index, and I won't get fired, and I'll try to make it up someplace else. Here's what I see here. And I want to draw your attention over here to the far right red line. This is the relative strength line, and the stock hit new highs on okay volume at best. The relative strength line didn't confirm, and my suspicion is this is NVIDIA going north, AI garnering attention, people saying that we're not going to go into a recession, so maybe I don't need to hide into marginal quality burgers, and I want to go find AI plays. And that might be what's going on here. So this non-confirmation or divergence where the relative strength line is not matching the price action of the stock itself is a minor warning flag. My sell discipline hasn't been invoked yet, so it's a hold. But if you had, I would put this in the category of source of funds. If I found something that I really wanted to jump on, this would be something that I don't think is going to run away from you, and I think is starting to weaken maybe substantially. So a hold, but keep your head on a swivel and keep your head here so I can tell you when the sell discipline comes in. Scott from London. What do I do with I said Facebook because I can't get used to saying Meta. What do I do with Meta? Where does Meta go from here? And again, this is a hold, and but it is a hold with this modification, if you will. This was an absolute fiasco. 300 down to less than 100. The metaverse is going to change the world. I'm going to change the name. This is Zuckerberg talking, not me. We're going to spend billions and billions of dollars. And then finally, Brad Gerstner and other people wrote letters and tapped him on the shoulder and say, you've got a golden goose here. Why are you shooting it? And they said it nicer than that, but I'm paraphrasing. And so he said, okay, I see what Elon's doing. More on that later. Let's lay off a lot of people. Let's get lean and mean. Let this be the year of efficiency, I think is the term he used. And the stock just started going north. It became so cheap. It became a value stock, so it garnered a whole new audience. Now it's a growth stock again. But take a look at this. This is a line. This is why I pay attention to the chart so much, and I want you to. This is a line from at 207 that goes back to the COVID bounce, that high that's from now 3 years ago. And so we're going, look at how we're kissing this right up here. There's a lot of people that said 207, I bought this around here. I'm out at break even. Thank you very much. I'm going to feed the ducks. I'm gone. And that's going to happen. So I think you're going to have a hard time making a lot of money above here in the near term. The Threads news is unbelievable. They basically went from 0 to 100 million subscribers in 2 days, 3 days. They clearly want to crush Twitter. Twitter is crushable. The product is getting pretty good reviews. So you have spending going down, layoffs, margins expanding. The base business is pretty good. Instagram Reels is promising. You have the positives of Threads, and you have people that maybe were short and said, okay, now I'm wrong, I've got to cover. I think that's all played out. I think 207 is a stall. So it's a hold. And but again, if you find really, really compelling ideas to add to, I might pull this off the shelf, say goodbye to it, and go on to something else. So that's it for the mailbag this week. If you want to write into the show with any questions or comments, email me at bakes@stockmarketauthority.com. Even better, leave me a voice recording and we can play your question on the show. Let's take a break. When we come back, we'll take a look at the Stock Market Authority portfolio, and I'll give you this week's Bakes Takes. You're listening to Stock Market Authority. Hang in there. We'll be right back.
Do you want to become a better investor? Do you want to learn how to make money in both up and down markets? Then you need to go to stockmarketauthority.com and sign up for our free newsletter today. Stock Market Authority is run by award-winning investment manager Kevin Bakes Baker. His aim is to save you time while teaching you how to be a better investor. Bakes saves you time by diving into all the latest stock market news and information so that you don't have to. He reads all the latest articles, analyzes the charts, and listens to all the relevant podcasts. And then once a week, he gives you a breakdown of what's happening in the market. Stock Market Authority is constantly outperforming the S&P and the HFRX. Bakes is going to share with you his weekly stock observations. He'll give you concise insights and show you how to lock in profits and minimize losses. Stock Market Authority is making money in up and down markets. Wouldn't you like to do the same? So join now and let Bakes show you how. Head on over to stockmarketauthority.com and sign up for our free newsletter today. That's stockmarketauthority.com, making money in up and down markets.
We're back, and today we've been talking about identifying winning charts. I hope I've been more clear than in the past. Please let me know if I haven't. Now it's time for the Stock Market Authority portfolio. And here's the performance that we have from since inception through June. And to make a long story short, drink, Jack, we're 2.64 times the hedge funds, the HFRX. That's the index of all the hedge funds that are out there. And my goal is to make money every year. So far I have. I'm beating, the hedge funds substantially. I was substantially net short last year. I'm now net long. So far, so good. Your manager has a different goal. And my same friend had, said, Bakes, everybody, wants to make money every year. No, they don't. If you're a traditional money manager, you're long only, you can't go short, you can hardly have any cash, you have to watch turnover, you have to invest in sectors like financials that are dog meat, and you have to hug the index, whatever it is, the Russell 2000, the S&P, and you can't deviate too much from that. You got to justify your 65 basis points or whatever the hell you charge, and more if you're a hedge fund. And this is the cold hard fact. Yeah, the market's up 70% of the time. Human progress is eternal, but you go down 30% of the time. And they concede that they're going to go down 30% of the time. So they're not trying to make you money every year. It's just not set up that way, period. So we're doing it. I'm putting it right here in front of you. I always want to do better, and I work really hard to do that. But this is the cold, hard realities of what we're doing. And I do have the retirement account that just buys the S&P 500 every 2 weeks, and then I do this, and it just seems to make sense to me. I talk to a lot of people, especially older people. They're way more concerned about the down 30% of the time than the up 70, especially if they're closer to retirement and big capital needs and what have you. So this is what I do, and you adapt it to your situation. I obviously don't know it, and this isn't financial advice. Next, let's go to the portfolio itself. And same friend asked me about what's your end game, and number one, I want to have sponsors to support the show. I want every student-managed investment fund member to subscribe to this so that we can have Barron's and The Economist and Market Smith and all these great services that I use for 25 years and give them to show them to a new audience. And really, I want to have my own ETF. I want to be your hedge fund. And I'm going to prove to you over the last 3 years and going forward that I know what I'm talking about, and I have a very different approach. And if making money every year appeals to you, and I can't see why it wouldn't, I'd like to have a hedge fund at some point down the road. So that's my end game. I can't be more transparent than that. To that end, I try to find the 10 best ETFs out there. I go through 2,000 plus charts every single month, often more frequently than that, and I try to find out what's working no matter what it is, where it is. There's an ETF for just about everything: commodities, currencies, stocks, etc. And there's no reason you have to be entirely in the U.S., be entirely in the S&P 500. So, I will make money. I made money in the 90s in energy and titanium, and people said, "Titanium, what are you doing?" I didn't care. The fundamentals were great, the charts were great, and so let's make money wherever we can, and that just makes sense to me. So we're back in uranium. We doubled our money plus 2+ years ago. We're 10% in uranium right now. It's having a great day. I think it's going to have a great 2-3 years, in my opinion. I'll go into that more. We talked about that about a month ago for our new buy, URNJ. We're 10% in Argentina. It's weakening a little bit. Mercado Libre, the number one name, is not looking that good. So I'm monitoring that. I'm 40% in AI, technology, robotics, etc. We did this prior to NVIDIA going north because the chart said something good was going to happen, and so we're there and making money pretty dramatically. We're 10% in Bitcoin through the Grayscale Bitcoin Trust, which we talked at the beginning of the show, and we're 10% in the Bitcoin miners, the marathons and the riots of the world. And frankly, it's become our number one winner in a very short period of time. Now, we got work to do. We're down 11%. I'm down 11%. There's no we, it's me. Down 11%. The S&P is up 15, and please remember, we were up 6% when the S&P was down 20. So I think I can be up again this year. Can I beat the S&P? Please stay tuned. I love a challenge like that, and frankly, I like my chances. So I'll go through recent improvements in my newsletter and social media posts. Please subscribe, follow, and share. That's how we're invested. I can't believe this, July 12th right now. Let's get into this week's Bakes Takes. I got 3 takes this week, and I hope this is going to be, I think this is helpful. The first chart here is Nigeria, the Global X Nigeria ETF. And I've talked about it a little bit before. We've owned it before. Our sell discipline got us out. And, this has been a waterfall down for years here. And we're looking at, breaking above this 1089 level, this line. I don't have a line here, actually. But you can see down here at the lower right, the ETF is washed out, and it's starting to perk up pretty substantially. The volume is picking up. And so I've always liked this idea of the charts are a great arbiter of time, where you spend your time. And so would I stop on this Economist article of Nigeria, the new president, if I didn't have this chart context? Probably not. Probably not. And if you pull, 100 people off the street of Boston, Salem, London, wherever, and say, hey, why are you bullish on Nigeria? They'd probably look at you like a club seal. Well, new president has kicked out the Fed chairman, basically, their central bank head, who is widely despised, cleaned up corruption, stopped subsidizing petroleum, put all the exchange rates together so the black market goes away, and open it up for business, in essence. So you've got positive change here that I don't think is expected by many people, especially U.S.-centric investors, with my crazy process and thoughts here. I just want to make money every year. So if it's in Nigeria, great. If it's in Poughkeepsie, why would anybody care? And this is part of my thing with, I'm going to backtrack a little bit. I think Peter Lynch had it wrong. Invest in what you know. Okay, if that works and there's a new Home Depot before it becomes a 10-bagger, that's great. But if Nigeria is a 10-bagger, and it looks to me if it retraces some of this, it could be. If uranium works, you don't have to be Homer Simpson working in a nuclear plant to figure out that uranium is going to go up. So I want you to open your mind a little bit and not pull off the Lululemons and the Nikes and all the familiar things that, frankly, have 11 analysts on, and there's not much of a way to get an edge. So I hope that's been helpful. Keep an eye on Nigeria. I haven't pulled the trigger, but I wanted to impose upon you my view. Charts first, fundamentals second, but the charts make you look for fundamentals that crop up. I hope that's helpful. Regional banks, look at this, and this kind of plays into my First Republic comments before. Obviously, you had that, and 3-4 other banks that went to zero, just because they bought bonds, 10-year bonds, and didn't ladder maturities. It's astonishing to me that could happen in this day and age, But anyway, it did, and it's so easy to move deposits around with your phone now that capital flight can kill you, and it killed some banks. Some people are saying, there's value here. This is the reason the Russell 2000, which has a lot of small regional banks in it, is going to go north. Maybe, but it's not the way to bet. And it's the same kind of thing. I wouldn't be looking at this Wall Street Journal article, Fed to require banks to bolster capital after a string of failures. We talked about this when it was going on. It just makes sense. Hey, you guys screwed up. You have to have more capital on the balance sheet. You have to have more FDIC insurance so that this doesn't happen again. And so a business that is, frankly, okay at best, tough with an inverted yield curve when you're trying to, borrow short and lend long, I think it's going to be really tough for all the banks. Now, the big banks are going to be reporting today, tomorrow, this week. I don't think you'll learn a lot from J.P. Morgan that's going to apply to, Hudson Savings. I'm just making this up. So don't get too crazy about cheap, about value, about financials, about regional banks. I would not touch this right now. I watch it, but that doesn't cost anything. So I'm here to make money, and right now, I think it's okay. I didn't have I forgot to put a chart in, but I wanted to talk to my University of Houston MBA friends. Oil. The oil services name, OIH, is looking like it's improving pretty significantly. The E&P names, exploration and production companies, like EOG, where you did all that great work, is kind of meh still. It does not look as good. So how does this resolve itself? Oil's at 73. If you get to 83, do things start looking better for the E&Ps? Probably, but something's going on where the service names are starting to go to the upside and the E&Ps are lagging. So stay tuned, and I will be as helpful as I can be. Next week, we're going to be interviewing a CEO live. A friend of mine works at a company. I'll go through my process even more than I did with the Back to Basics. I want to get your feedback. Do you like it? Is it helpful? Et cetera. Those are my Bakes takes for the week. As we close out today's show, I always like to end with some much-needed levity. This is Josh Blue, very funny comedian, has cerebral palsy, laughs at himself, laughs at the people that are uncomfortable with people with cerebral palsy. He won, I think, third in America's Got Talent. This is some of his best bits, and if you need a chuckle, I think that's going to be great. That's it for today's show. Please go to my YouTube channel and subscribe and share. Get me to 1,000, please. I really appreciate that. I'll see you soon. We're looking forward to next week. Take care. God bless. Bye now.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Café, the United Podcast Network, its partners, or affiliates.